Hey, we got to talk about something that's really important. It's the warrant on Tattoo Chef. Now, what is a warrant? It's a contract to buy one share of stock at a predetermined price, just like a call option. Now, this warrant for one share of stock has a strike price, and for SPACs, they all have a similar strike price of around 11.50. And so that's the price we have to pay. In this particular example, this Tattoo Chef warrant is going to expire next week on February 16th. You either exercise it or you lose it. It becomes worthless after February 16th. Now, Tattoo Chef is very different from other SPACs. They've actually declared a cashless exercise, and they're doing this to reduce dilution effect for existing shareholders. So you're going to pay the 11.50 strike price in shares, not cash. So that's 0.4883 shares instead of paying money to exercise those warrants. That's the first one I've seen so far. Most of them want cash. So you're going to buy a warrant for $12 per share today, and you're going to do that instead of buying shares at $24 because that gives you the leverage of 2-to-1. So that's why people buy warrants, because they're cheaper than the stock. Now, if you buy the warrant for $12 and you don't want to exercise, you can still go in and sell it in the market, just like you do stock, as you do with call options. There's a market maker out there that's happy to trade on the other side. Now, if you can't decide whether you want to buy one share, you got to decide by February 16th. Okay, so you either exercise it or go and sell it in the market now. Do not wait. Do not forget. It will be worthless after February 16th at 5 p.m. So what does the profit risk profile look like for this warrant? If this Tattoo Chef does not go below 23.50, then you will not lose money with this warrant. Okay, so what is the break even for this stock? Well, it's 23.50 on Tattoo Chef. There you will make no profit and no loss at 23.50. So that's your break even on this chart. Now, if the stock shoots up to 35, you'll make $11.50 profit. Now, what's your risk or your downside is what you paid for the warrant, which is $12. But you can't lose more than $12 with this warrant. Okay, so that's the benefit of a warrant over stock. So what is the exercise going to look like for this cashless basis? Okay, this is the first one I've seen so far. You have to surrender 0.4883 shares, and then the remainder of those shares will be given to you. So from my perspective, I see no benefit for you to be in there and trying to convert your warrants to shares. Okay, now how would you normally hedge the exercise risk of waiting a few weeks to get those shares? Well, normally the warrants are trading at a discount. In this case, they're really not. So instead of going in and buying a put and paying money to lock in a profit, in this case, you can't do that because there is no spread for you to arb. So basically, you should just sell this warrant into the market and buy shares versus waiting a few weeks to collect your shares. So that's Tattoo Chef's warrant. You got till February 16th, 5 p.m. to tell your broker, call them up and say you want to exercise your warrants for shares, and then they will help you with that. All right, so good luck.